Good afternoon. This is Rick, and we'll get underway in about 3 minutes on the hour. Just give people a chance to get in the room. I have quite a few people signed up for today. It will be a request session. This is something that I do on a regular basis for subscribers, and typically we can get 15, 20 issues out with charts, and it's not unheard of that subscribers will come back 2 weeks, 3 weeks, a month later and say that they did well with something that I may have a chart that I might have looked at, and I don't have any biases going into these sessions. A lot of the things that I'm looking at are stocks that I don't even recognize, which means I'm completely impartial. So that could work to your advantage if you want me to look at a stock that gets very little technical coverage. And this session will be recorded for the benefit of those who could not attend but who registered. Chart in front of you is E-mini S&Ps. I did put out something earlier in the Rick's Picks chat room. It's a good place to come just for trading ideas, and sometime around, let's see, what's today? Today is Tuesday. I think it's Tuesday. Anyway, you'll see at 10:06 here, I put out a 293250 target on the E-mini S&Ps, and the hidden pivot method that I use allows for some very precise swings. There's the message went out, the post went out just when it was noodling around below that target, but you can see it did hit within, it turns out, 3 ticks of the target and pulled back 14, 15 points there. So there was money to be made, and always trying to find out who did these trades in the chat room, because if I have 2 subscribers who got into the trade, I will typically track it and offer guidance going forward. In this case, with the pullback 3 ticks from the target that I put out there, some partial profits were in order coming down the way here. All right, anyway, this is a request session, and we'll get underway right now, 2 o'clock. And first request is Amazon. Now I'm going to be using the hidden pivot method. It's an ABC pattern that we can employ in different ways to get a pretty good handle on where things are going. And the key piece of any ABC chart is this red line here. I call it the midpoint pivot. And depending on how easily a particular stock or trading vehicle gets through that midpoint pivot, I can get a really good handle on the trend strength. And in this case, we had a little bit of a struggle at the midpoint. You can see, I would say there's probably an 85% chance that Amazon is going to get to that 2049 target. Actually, given that we're in a 10-year bull market, I would put the odds at over 90%. And I expect a pretty precise pullback from that D target. But you can see the first time that Amazon encountered the midpoint pivot, that red line, I hear a lot of back talk there. Dave, if you could mute your microphone, I'd be thrilled to death with that. In any case, we saw this stock blow right through the P midpoint, and I think it gives it very good odds of getting a 2049. That's a pretty hefty rally from here. It's 140 points, and obviously there's a lot of upside opportunity. So that's where I think it's going. If it surprised, shocked, and pulled all the way back to the green line, that would not only not make the chart less bullish, but that would be what we call a mechanical buy signal. So if it collapsed to the green line, that would be a fabulous opportunity. If it comes down to the red, that would trigger another type of mechanical trade that we would take a look at. But you can, with these mechanical trades, working on the 1 minute bar chart, we can craft entry points that give us entry risk on the order of 8 to 12 cents a share, which is not bad when you're trading a $2,000 stock to get in that cheap. So we can limit the risk very seriously. To give you some idea, using an ABC pattern on this 1 minute chart, the entry opportunity, well, actually, this is another type of entry we do called a counterintuitive, and a place to get into Amazon would have been at that green line, 1904. But typically when we're trading a $2,000 stock, we don't want to use buy stop or stop limit orders to get in, because you can really get clocked. And that's where the mechanical trade comes in handy, because they're always executed by way of limit bids, limit offers. So we're always getting in on a bid or an offer. And that's a very good way to get in if you want to be sure as to whether or not your order has been filled. Before we leave this chart, let me just mention that Amazon did not pull back enough to give us one of those mechanical entries. So we either did it that we might have had to look for another way to get in, and there is one, but I'm not going to get too heavily into it right here. Request for a stock, I don't know this symbol, NSRPF, and it's looks like a resource-based company, and the lawnmower picked, of the 168 hours in a week, it picked this particular 1 hour to. I apologize in advance if you get any ambient noise here, because I've got a guy, I'm sure he's going to come right up to my back window here and trim the hedge. So just bear with me on that. It's been one of those days. You get into one little tech issue, and you can easily spend 20 to 30 hours on it with Microsoft, Facebook, and whoever. This stock has overshot a $1.73 target, and it was predictable that it would get at least to that target because of the way it blew through the red line, the midpoint pivot. That's usually a sign of a strong trend that is likely to continue, and that's what we have here. So when we exhaust a target on the small chart like this, in order to project a new target, we have to assume that this stock is in some bigger bullish pattern. So if I go to the weekly chart, you can see that it's just trying to base here. The stock has been in a wicked bear market since late 2017, and you can see in the context of this longer term chart, what looked like a big rally on the 20-minute is just kind of a little blip. Be that as it may, it's setting up a counterintuitive trade, and let me give you, it would have been a buy. If you'd come to me a week earlier, I would have said, well, you can still do it because this is the first time this week, either yesterday or today, that it tripped the theoretical entry signal there at $1.69. The lawnmower is about 8 feet from where I sit. Great. Again, I apologize for that if you're getting buzzed by the noise. So it was a theoretical buy today at 169, so you could actually do it right here. The stop loss, though, would be considerable for that type of trade entry. It would be at $1.37, just below that low. But typically when we do these mechanical counterintuitive trades, we're looking for a ride at least to the red line, so that's a 31-point rally. and you're risking to make 31 cents, about 31 cents. It's 1 to 1. Typically, all of my trades are in a 1 to 3 risk reward relationship, but not the counterintuitive, which has a way of working more consistently than some of the other entry tactics. So I think it's going to get to a minimum $2 here, and in order to find a cheaper way in, I would use one of these lesser charts. Another request for when will you start with ESU? When it's time, Buffett wannabe. Request for JNUG. Let's take a look here. If I can get it to take the, hang on here. And a gold vehicle, it's Miners Bull 3X ETF. I never recommend trading 2X, 3X, anything like that, because they were, all the ETFs were created mainly to steal from you, to steal from Joe Sixpack, and that's why they exist. Especially the options. The options are a rigged game. And I wouldn't suggest ever buying these options unless you think that you are going to be profitable. And if you're getting in such a way that you think the options will be profitable in 60 to 90 seconds, that's the best way to do an options trade. But if you leave yourself lots of time, like 7 or 8 days, you're in a bad trade unless you're setting it up initially as a calendar spread or a condor, a butterfly. But just to do an option, to trade an option directionally because you got a gut hunch here, because you think you're bullish, you've got a much better chance of making money drilling oil wells in the basements of YMCA buildings. So that would be my advice on options. And I don't see, you could buy this thing in the raw, meaning not the options, just buy this thing at an entry trigger price. And here, it is also in a counterintuitive rally, which means if I set up a pattern for that trade, it triggered an entry at $8.17 a few weeks ago, and it's on its way to here a minimum 1003. I would be careful up there because there's a lot of resistance. If it pops through on the first day that it encounters that resistance, I would give it a pretty good chance of getting to 13.75. Those of you who have followed my gold forecast know that I just recently turned bullish. I've been hating gold for such a long time, but I can read a chart, and when it says time to turn bullish, I go bullish. To give you a chart on the this is the August COMEX future. We've had subscribers have been using a 1214 target, and let me see if I can show that to you. Or I'm sorry, 1412 target. And just based on the way it has handled the midpoint resistance, the red line, I think it's going to be a real struggle to get to 1412. I'll use the target and treat it as though it's going to be hit, but it's going to be I think a real slog to get up there if it gets there at all. We'll pay particular attention at the pink line, 1377.50. That's my minimum upside projection for now, and that could be it for the rally, though. So we'll really have to keep a close eye on this, and I don't really like the way this thing is handling the red line. However, I did put out a commentary the other day to try to explain why gold this rally might be for real, because we've been waiting for a for real rally since 2011, a new bull market. And the reason I think on the fundamental side is that we're getting into the prospect of a fiscal blowout, meaning it doesn't matter whether Trump wins or loses. If he wins, the Republicans have no more concern about budget deficits than the Democrats do. And if the Democrats get in, there'll be a total spending blowout at the fiscal level. And if Trump wins, same thing. So I think gold is beginning to sense that, and that's why I'm turning more and more bullish on gold as an investment. I've got a request for Caterpillar. Here, very powerful impulse leg in the stock. You can see that the one, I give away a trick here, but the one thing I look for in trend legs is trend legs that they're unbroken. Here we went all the way from this low to that high. There are no pullbacks along the way, and it got past 1, 2 what I call external peaks. So I think it's a very promising uptrend. And if you're bearish on the market as a whole, you better think twice if Caterpillar is going. Now you see that Caterpillar, the first time it encountered that midpoint resistance, the red line, that's today. It has, I wouldn't say blown through it, but it has pushed through it, and so far not stalled. If it closes for 2 days above that red line today and tomorrow, I would give you maybe a 75–80% chance that the stock is going to get to 136.36. So it's good looking rally, really strong impulse leg. Impulse leg is a very key idea of the hidden pivot method, and it's something so simple that that you guys already know it. So you've already learned what an impulse leg is. It's a trend leg that gets past 2 prior peaks in an uptrend, lows in a downtrend. This correspondingly was a very powerful downtrending impulse leg from that high to that low. And you can see all along the way here, there's no upward BC type corrections, and it got past all kinds of prior lows. And you can see the turnaround occurred from below the midpoint pivot, and that was a sign of weakness, but Caterpillar overcame that and now looks pretty good as far as I can see. Here comes the tractor for another pass. Thank you. He's 8 feet from my back window now. He says, well, I mowed this before, but let's mow it again because I think I can see that guy in the window doing an online presentation. All right, let me peel these lines off. Advanced micro looks fine. The last real impulse leg on the chart that looks good and legitimate is right here. And this has been something I've been seeing in every stock, every time frame, in uptrends, downtrends. Virtually everything I look at is a failure to hit the D target. It fails between this pink line, the secondary pivot, and D. So in theory, the D target is still valid unless this thing comes down and stops out the point C low of the pattern. So I'll give you a 34.94 target on a stock, but it's at this point, it's only theoretical. The stock tripped a counter. These trades are all over the place because nothing has the strength to really blow through the all-time high. So advanced micro will be, it was a counterintuitive short yesterday at 29.77 for a shot at 25.24. That's where I think the stock is going before it turns around. Although I would look for, I'd put this on a smaller chart. Actually, I'll do that for you. I think it was a short yesterday at 29.77 for a pullback to 25.24, maybe even the beginning of a bear market. Although I'm tending to doubt that because this bull market has been, as you know, going for 10 years plus. All right, so to get kind of a finer nuance here as to where we might come in and buy against the bigger forecast of a downtrend. Let's see. Well, everything I see is a counterintuitive buy signal on the stock. So there are, let's say, contradictory signals right now. In this case, I would just decide which way I want to trade it. Short term is up, and a trip to counterintuitive buy, which I think is good for a pop at least to 31.75 before the stock breaks down again. Request for Intel. And we've got a Jim Dandy pattern here, very clear. for reasons that I'm not going to make clear. They are proprietary tricks that we use. Intel looks like an absolute lead pipe cinch to get to 48.67. Notice that when it got to that midpoint hidden pivot, the red line, it just blew right through it. That's telling us there's almost zero chance that it's not going to get to at least 48.67. How do we buy it? A lot of ways to do that. You'll need to take the hidden pivot course to find out all 5 of them. But one way typically would be to buy a pullback to the red line with the stop loss mechanically equal to 1/3 of the difference between where we're getting in the red line and our D target. So anyway, it's got, I would be careful up there though. When it gets to 48.67, there should be some resistance there, maybe even tradably so, to go against the trend to do a covered right or whatever. And I want to take a look at the bigger chart just to get the lay of the land here. And someone must have asked me about this stock before, because I've got bull market lines drawn on it for 66.73. Just for your information, the stock became a so-so mechanical buy when it pulled back to that green line in May. All right, so it's now a little more than a month we've been long the stock, and we're still looking to get even on that trade, and I think we will. But it's not a heartening sign that this thing is struggling so much below the green level, the green line. Like every other stock we've looked at, there is the counterintuitive buy in it in a bigger picture. And I'm not going to go into the top secret details of the counterintuitive trade, but let me say that it does presuppose, it infers minimum upside to the red line, 51.48. But in this case, since virtually every stock that's being traded on the earth right now has generated a counterintuitive buy signal, we're not shooting for the D target here. We're going to play it safe and look for a ride only to the red line. So your risk reward is effectively 1-to-1. But it did trip this counterintuitive signal on the bigger chart here. So I think we'll be looking at minimum upside to 51.48. FXA, I'm not even sure that's a symbol. It is. FXA is the currency shares Australian dollar. It's maybe some sort of ETF vehicle for the Aussie dollar. And great time to visit Sydney. The pattern that just kind of strikes me to get it, it's down around 63 cents if I recall, but let me look at it here. Well, this is not as big a pattern I was looking at, but as I was looking at earlier, but I think the Aussie dollar is going to come down at least to 67.35, and I would expect a pretty nice rally from there. It'll certainly be tradable from the point of view of this chart. I just don't see any avoiding it. A request for, I'm not sure what this is. Actually, I'm surprised to be able to call it up. The New Zealand dollar. All right, so these are all sorts of ETF vehicles for playing foreign currencies. And I don't know why the New Zealand dollar, we've got a big gap here. And I don't know why it's doing so well relative to the Australian dollar, but everything points higher. And I hope I haven't insulted any New Zealanders here. Well, I'm going to be very cautious. I'm not going to forecast anything here because there are just so many missing bars on this chart. But to me, it looks like all systems are go here. It's very strong. All right, request for GDX, a gold based vehicle. And I think we can, just to get a handle on this, we can come down to, if we can come down to anything. All right, there we go. The pattern that strikes me is this one maybe, or this one. Well, typically we look, if I see that the rally has met with precise resistance at the red line, using this as our point A, that's the pattern that I take. But anyway, it was a theoretical buy at 21.39 back 3 weeks ago, and is doing well. It's made the minimum requirement here, 23.88, but I think we've got more upside here to at least 25.12. That's where I think it's going. And if it gets through it, I'd be looking for 25.58, a little bit higher. Be real careful up there, because this thing will be ready to take a rest, maybe turn down if and when it gets there. The price action at P is not decisive. In other words, it didn't really just blow through it, it struggled. So we may have a little struggle to get to 25.58, but that is my target. Scott, you're gonna have to pick one. You've got 4 symbols there. Let's see, Sean, BYND is, what is this, some sort of marijuana stock? Oh, Beyond Meat. We covered that in the, I think I said I didn't really want to say much about it. It's just one of those whack job stocks. I think, didn't it supposedly take a hit because Tyson decides it wants to sell phony meat too? I don't know, but all right. It looks like 250 to me, 250 and change, or maybe I tend. All right, so minimum, based on the way it blew through the red line, I'm going to guarantee you 234 on this. That's where it's going. And I know if there are any regulators in the room, I'm not allowed to give you guarantees like that. So let's just say there's a 99.7% chance that this thing's going to get to 234.90. It is in the lunatic group of stocks, the stocks that institutional lunatics simply, they don't know sell, there's only buy. And this is one of those stocks. So there's just no holding it back. Snap, which I guess I don't know. I don't follow Snap closely enough to know how it recovered from its bear market, like what it started doing right. These days, it's like a beer. If it's a craft beer or any beer that you're getting advertisements for, it's owned by Budweiser. So I can't remember who owns Snap, but it's not. I don't think it's Snap. It must be Budweiser or Google. But it blew through the highest target I could. Well, I get one higher there, and it's blown through that as well. So this is, again, one of these stocks that the institutional lunatics, I don't know that they even trade $15 stocks. So this must be your private sector lunatics who are making this thing move. And as far as we really need to sort of isolate out the right-hand side of the chart, since it seems to be blowing away patterns of larger degree. So it looks to me like 1676. If it blows through the red line, I'll guarantee that as a minimum upside target. And you know, those of you who've been with me for a while and know the mechanical trade know how to get into this stock. But if it trades a little higher and pulls back to the green line, that's how you do it, with the stop at 1339 for a shot at 16.76. Elliot, I think we've heard from you. Let's see, soybeans. I'd like a contract month if we're going to look at soybeans, but all right, we'll look at the Julys in any case. And let's see, looks like minimum $909.25 a bushel. Is that, how does this work? 9.25 3/4 a bushel. And the way it went through the red line, there shouldn't be much doubt about where it's going. It might, I would look at the possible counterintuitive short if this thing tops somewhere between this high and that high, which it looks to be by a quarter of a cent or so in that range right now. But I would be open to shorting this thing on a mechanical short if it tops somewhere in here or there. Again, you'll need to, well, let me, if you're interested, I've mentioned this mechanical trade a few times here. And if you really want to see how it works, um, come to a demo. I'm giving a demo Thursday night at 8 p.m. Eastern time, and I want you to jot this down if you're interested, because if you come to it, you'll learn how to do the mechanical trade. The demo is rickackerman.com /demo. And if you're really hot to trot, you want to learn all about hidden pivots, like starting this afternoon. If you want to take the full hidden pivot course, I've got a great deal. I'll tell you a little bit more about that at the end of the presentation, but a great deal at rickackerman.com /web deal. All right. rickackerman.com /web deal. It's the best learn everything package that I've ever offered. But again, if you just want to learn how to do the mechanical trade, come Thursday night to the demo, 8 p.m., rickackerman.com /demo. All right, so soybeans could become a CI counterintuitive trade if it goes just a little bit higher, and I'll be looking for that. Let me say I did get in soybeans way with the short and wheat too, and regretted it. So I'm going to be real careful the second time around. Tesla is in a fabulous lunatic move. One of the constructive positive effects of the short squeeze that the stock market's been in lately, the Feditis or Fedphilia, it might save Tesla, or at least it'll give it some room to maneuver. Tesla, like everything else we've looked at today, is a counterintuitive trade. In this case, a short. It would trip the short if it hits the green line coming down tomorrow, or perhaps Wednesday or Thursday, for a minimum play down to 205.99. So I think Tesla has sort of run its course here. And again, a print down at 220.36 would trip a counterintuitive short. I can't look at something on the Toronto Stock Exchange. Someone wants to look at here at GDXJ. The symbol request was ABN, whatever that is. I don't know. Is that ABN? Is ABN AMRO still exist? Not sure. All right, GDXJ. Same things that I said about GDX. If I'm projecting a target, I'll give you upside to 33.79 in this bull cycle begun in late May. Looks like it could be a little bit of a struggle. It's not going to be a pop tomorrow or the next day to 33.79. It might take 4, 5, 6 days to get there, but I think it will. A pullback to the green line would be a mechanical buy. Put a bid there, stop yourself 29.87 on the trade. But one other risk I'll be looking for monitoring closely would be the counterintuitive short from here. If the stock fell to 31.08 tomorrow or Thursday, I would say it's going to come down pretty hard, at least to 29.89, maybe even to this pink line or the lower blue line. But we've got a mixed picture here. The thing that I mentioned earlier, the impulse leg, is the key to everything I do. And it's something you can learn. You already learned it. It's just a trend leg that gets past two prior, in this case, lows. High there, low there. It got past low, internal low there, external low there, and a little mini external low right there. So this was a pretty powerful impulse leg, and it works against, it's working at cross purposes with this impulse leg that we're looking at now. But I'm gonna say we've got a good shot of run up to the target that I just gave you a moment ago, the bullish target. SCCO, which is Southern Copper. And I want to look at copper first just to see what the metal's been doing. It looks like everything we've looked at today. I don't know what the deal is. Everything's a counterintuitive buy. All right, so to come back to the stock here, it's certainly outperforming the metal, Southern Copper. All right, it stopped at a key price. If it gets through there, meaning closes above it for 2 consecutive days or pops decisively above it intraday, I think this thing's going to 39 point, it's going at least to 41.94. But again, it's right at key resistance, the midpoint hidden pivot there. And I don't know, I don't have a crystal ball. So this could be the high for the next 5 years. But if it gets through it tomorrow and it really pops through it with some force, it's telling us that 45.05 is where it wants to go. Look at IBM. You must be an old timer there, Jack. All right, so key to the whole chart is this really coy, very sweet and charming, sleazy. We've got a high there, 145.5, and another one here at 145.39. Let me check that again. All right, well, that's no. All right, so this high chickened out. It saw that resistance peak right there, and IBM didn't have the gumption to get through. So that was telling you that all is not right in the world of IBM. It happened in mid-April, and I don't like that at all. I call that a look to the lefter. And when the buyers are all up here and they take a look at that resistance and they can't muster the gumption that it would have taken to get through it, then I'm going to emphasize for my long picture view this downtrend right here. So IBM tripped a counterintuitive short there at the green line. I want to be careful because my projection, much as I hate the market, and I can give you at least 25 good reasons why the Dow should be trading under 8,000. Again, I can read a chart. I just simply go by the charts. But in this case, I want to pay attention to the fact that I've got a 3095 target, very significant rally ahead in the S&Ps, and if it's going there, you know, IBM may break through that line there. But it was at least a reasonable spec short here. You might have covered some of it down there mechanically midway between this green line and the red line, but I'm sorry, it was a all right, so it's a counterintuitive short there, and the jury's still out. You know, we can trade it either way, and typically we're going to see if the downtrend is not going to continue, then we should be able to go to little charts like this one and see that the stock is achieving all manner of A, B, C, D targets. The hallmark of a bear market is corrective rallies, A, B, C, D uptrends that don't quite get to D. We're kind of seeing that here. It should have gotten to D earlier this morning. It might get to D, but with the struggle. So I really don't like the price action in IBM, but it's going to do no worse or not much worse than the market as a whole. So we have to consider that. But the bigger picture, I really don't like it. Sandy wants to take a look at Apple. And this one isn't rocket science. Apple is lunaticking probably to 216.08. When it was down here, 140, you'll recall that the discussion was pretty well centered. It involved the fact that Apple was not selling as many iPhones. People were keeping them longer. It's possible that it's getting a little second wind from the fact that Trump and the U.S. government have delivered, if not a knockout punch to a major competitor, Huawei. It's at least hogtied Huawei. So this is to Apple's benefit, even though what we were talking about down here at 140, that the company is clueless, that Steve Jobs should be rolling in his grave when he looks to see what Apple's got in the innovation pipeline. Their big innovation when the stock was getting killed was, hey, look, I think we're going to get into the streaming content business, which is hyper competitive. There's no money to be made unless you're Netflix, and even there, Netflix has bid up the price of talent, so that streaming is a really it's an elephant graveyard category right now. But that didn't stop Apple from rallying from 140 to 220. It is the most owned institutional stock of them all, maybe getting close again to being the world's most valuable stock. So all the dirt balls are kind of hanging together and saying, look, guys, we do not sell this stock. We only buy it. So that's what's going on. Looks like 216.08. We have a separate impulse leg. And again, this is a trick you guys have already learned. Let me take the smaller impulse leg. And it's definitely a good, it's strong, but if it were like really strong, this little bunch of peaks should have taken out that external high right there instead of having to tiptoe up on it and then pull back and get a running start. So that's not, I wouldn't call it a sign of weakness. It's just a sign of Apple's a little bit timid here, even though, yes, we squeezed shorts this morning with a gap up opening, and that's really, you can see where the stock makes its most headway on these sleazy gaps. That's and I've written this in the newsletter maybe 700 or 800 times over the years, that all strong rallies are short covering. You know, the major resistances that eventually get exceeded, that only happens because of short covering. So short covering is the most urgent and powerful form of buying. And the dirt balls who were running the show in Apple have not lost the opportunity here on the opening bar to get to squeeze shorts for all they're worth. 1, 2, 3, 4, 5. If you add up the points that were gained in those short squeeze openings, you see how the game is played. It's really just one big carnival midway, but we need to factor that in when we're actually trading the stock. So based on the way the thing blew through 197.91, I'll give you about a 99% chance that it's going to get at least to 205.51. Request for WRB. This is, what is this? Berkeley Corp. I have no idea what Berkeley Corp does for a living. I would tend to look at this ABC pattern, and I'll give you minimum upside to 66.17. If it gets through that, I would slide down for a slightly lower A to predict a somewhat higher target at 66.53. One or the other of those numbers is going to, I think, contain the move, at least for the time being. I'd be real careful when it gets to either of those numbers. I'm sort of curious to see whether this stock is paying attention to hidden pivot targets. And the one that I like, yes, it is. This is, I teach this in the Hidden Pivot webinar as my favorite pattern, a quick ABC, and it throws off all the other. Well, this is interesting. We got just a slight hesitation at what I would call a crystal clear D target. And that was a sign that there's real power pushing Berkeley Corp. I don't know what the heck these guys do, what their business is, but when they got through that nice, it's a very well hidden target. It's not like we're the only guys on the planet who use ABC patterns. There are Gartley guys who use 1, 2, 3 patterns, same as ours, although the idiosyncratic rules governing the patterns make anything the Gartley guys do with 1, 2, 3s very different from what we would do with them. But I like this pattern because when you get a quick ABC that establishes the D target, everybody forgets about it. This whole, just the length and time of this CD leg throws everybody off the scent of ABC. So the fact that it got there and then within the same day it was breaking through it, I would have said jump on this stock. There's no top to it. There will be a top at the two targets that I just gave you, but if it penetrates those pretty easily, then watch out above. This thing is just going to keep flying, and I would want to go to a bigger chart, this one right here, the weekly, to get a handle on this monster. All right, and very unintuitive pattern that I might look at is right here. And it's blown through that. It just doesn't seem to even care about the longer term D resistances. So we'll come down here to get, we've got a single bar A down there. I like that, single bar C. So finally, we've got a target that I can live and like. Let me slide back initially to see what happened on the quickie. All right. So the target that I'm going to give you, where you can start paying attention when it gets there, which it will, is 6901. Now you can see the way this monster blew through the red line, it left zero chance that this thing wasn't going to get to 6901. And I say zero chance, even thinking back 30 or 40 years ago, I went to see a heavyweight fight. It may have been Sonny Liston, Cassius Clay, actually, but there was a chance of 0% precipitation that night, snow, and we got such a heavy snow that night that people abandoned their cars on the road in the middle of highways. So when I say 0% chance, I know that it's always a little more than that, but I would say there's almost no chance this thing won't get at least to 6901. If you want to learn how to buy it mechanically, again, come to the Thursday night session. That's this Thursday night at 8 p.m. To the demo. And I think I have, hold on, if you want to get the invitation, just go to rickackerman.com/demo. All right. And that'll be not everything you need to know about the mechanical trade, but it'll give you enough that you can get in a lot of trouble. Just kidding. All right, request for Hal, whatever that is. Oh, Halliburton, right. Halliburton will trip a counterintuitive. The stock doesn't look great. It looks so head and shouldersy here, but even head and shoulders patterns have bottoms. So if it over the next, if it starts heading up and trips the green line, that could take 6 weeks really, because we're looking at the monthly chart. It would be a buy for a minimum shot to 47.60. But again, that's a counterintuitive trade, meaning I'm going against what my first instinct here, which is lower. And I'm going to take this little pattern here to give you a target. It's a shame these targets, this hidden pivot low, coincides with a low that all the riffraffs, village idiots, and hoi polloi are going to be looking for. Otherwise, I would say back up the truck and bid this thing 1484 and suck up as much stock as you can. If it gets up to the green line, 28.24, after having gone no lower than it did these last couple months, short the bejesus out of it, because that's how you're going to get your move down to 1484. You'll make that's a nice trade. The stock will get cut in half, and you'll have a chance at that point to do your counterintuitive buy to get long, using as a cushion all the money you'll make on the short side of the stock. It might break down by the end of June and keep going lower. That's possible. But again, if the low is right here, if that low holds and it rallies to the green line, Halliburton will make a great short. That's what I call, that's a CI trade, counterintuitive. We've got a phony name here, Buffett wannabe, wanting to look at GE. And I can't remember where you stand on GE, Warren, whether you've got Berkshire heavily invested in GE, but it's just been a horrible stock since 2001, really. Well, the end of 2000. It's been in a horrific bear market. I know my friend Porter Stansbury is preparing a piece on GE that sort of fleshes out where the company went wrong, and I don't mean simply administratively either. He's got some interesting people participating, so that's something I'll be interested in myself when it comes out. All right, the person who requested G said he hates it, but he's been stuck since 29. So no one could feel sorry for you, really. I mean, when are you planning on getting out? I guess you're if you weathered a loss here of 20 points, you need 60 points. This stock has to get to 70 to justify your having done the trade. So, but I know how it feels to be stuck in a stock and you just rode it all the way down and you're thinking, do I blow it out now, or is this little whore about to, to whip around? And I don't see anything here. The weekly chart certainly isn't bullish, otherwise it would have popped above 1, 2 prior external peaks. So in order to find anything that even smells halfway like it's like dead fish, but not quite dead for 6 days, even on a daily chart, we've got we've got nothing going on here. I mean, it didn't get past that internal peak right there. I'm sorry, external on the daily. It got past here, and I could have been a little bullish for a while on this impulse leg right here. And again, Rick, if you want to learn about impulse legs, this is the most powerful, simple little trick you're ever going to come across. If you want to learn about the impulse leg, come to Thursday night session, rickackerman.com /demo. All right. And just get on the right track there. All right. So, yeah, it did blow through the D target, and that's bullish within what's happened in 2019. So 2019 is bullified, qualified bullish, bullified, because it took this first pattern and blew through it. But since then, it's been a real muddle, meaning, yeah, we'll buy the Hail Mary pass in GE, but we don't really know. We're not too terribly bullish. So it's a mixed picture now. I don't know what to tell you. I could trade it either way. If you told me, Rick, I've got a gun to your head, what are you going to do? Get long. I could easily get long using what we do with the hidden pivot method. A little camouflage trade here. We take the smallest bullish interval right here, and this is the pattern we trade. So we're not really exposing ourselves to the initial risk of some of those bigger patterns. But right here, the stock was a buy this morning at 1021. Not for, yeah, you're out of half of it at 1040, but these little camouflage trades, the point of them isn't to make a fortune, it's to establish an entry price that gets you in pretty cheap. In this case, you're risking only 19 cents to get in at the green line, stop below here. So we got kind of a pop through P. If it closes above it and maybe does it again tomorrow, I'm going to guarantee you the stock's going to 1077. But I don't have a crystal ball. I can't get ahead of it to make that guarantee quite yet. Let's see. I request for AAL, which is American Airlines. Boy, do I hate these guys. It took me 11 hours to get from Fort Lauderdale to Philadelphia, and it was because of not weather, but because they had 3 crews that night. Well, the first one got timed out, and the second one, the pilot left the door up until the clock ran out on his crew too. And I had a 2.5 hour delay coming back from Philadelphia. So, and their credit card is bait and switch sleaze. It's get our credit card and you'll get priority boarding. When I tried that out and discovered that I was in group 6, having charged the ticket to American Air, the American Airlines sucks. So I would have said maybe a counterintuitive short on a little pattern. I mean, they really suck. I can't tell you how bad they suck. It keeps aborting. No, it didn't trigger a counterintuitive short there, and it didn't trigger here either. So it hasn't triggered any shorts. So I guess we got to get in a swing of long. I'm going to keep it on a short leash for any projection that I give you, meaning the only pattern I'm going to take a risk with is right here. it tripped what I call a conventional buy signal at the green line, meaning we're shooting for at least 35, 34. Since we missed the trade and it's trading lower, don't buy it. Wait for it to stop out the trade. In other words, to go below 32.10. Draw yourself a new ABC pattern and take the second conventional entry. To find out about that too, again, rickackerman.com/demo. Just come see the presentation Thursday night, and I'm guaranteeing you'll get something out of it that's going to be very useful to you in your trading life. All right, so still technically it's on a buy signal for a minimum 33.54, but it's got to get above this peak, well, this one here at 36.73 before I tell you the stock looks interesting. MU, Micron, not much you can say here. All of this action has taken place after Micron broke below a somewhat key low right here. This is one too, right here, because we had so much of a bullish action to follow that low. So I don't like the action in Micron at all. And I don't know if they've been hurt in the same way that Broadcom has been hurt and Qualcomm. They're both getting slammed by Trump tariffs, and just by the general climate the deep freeze has been switched on in Silicon Valley. There's not much I can say about this stock. Request for IBB. Not much I want to say about this either. It's a biotech. You can see it's trading exactly where it was at the beginning of the year. It's going nowhere. So whatever you're doing here, you're just sort of screwing a pooch. But I'll give you the benefit of the big pattern, assuming it benefits us at all. I mean, if you want to be bullish on that big pattern, you've been stopped out once, twice, 3 times, 4 times there. Just as this thing starts taking off. This one actually wouldn't have triggered us in, but this one has, as you can see. So it's maybe another false signal buy for a minimum 113.46. I wouldn't care to trade this pattern. I would look for something smaller and maybe even a counterintuitive short if it gets a little bit higher, like closer to that high right there, and starts coming down. So it's, yeah, the big picture really is bullish here, but the thing has been such a little nuisance that I would stay away from it. If you want to trade the options on this, the spreads are probably a mile wide. So I'm not quite sure why you asked about IBB and whether you actually trade it. Let's see, AWRB, we looked at that. Oh, okay, you're just telling me that this was financial services sector. Oh, so I still don't know what it is. It says WR Berkeley Corp, so it's not an ETF, but they're in financial services, so they seem to be doing just fine. John wants to look at the dollar, so let's take a look at the dollar index, which is right here. I'm very long-term, very bullish, and it became a reverse ABC buy down there at 96.64. I think it's eventually going to 120, so it tells you where I am. And I say that because I've been a hardcore deflationist for forever. So in the early 90s, when I was writing on deflation, there was virtually nobody else writing on the subject, although Ashby Bladen mentioned the word deflation in a Forbes column, and a guy named Bill Helming, who did agricultural forecast, mentioned the word deflation in a column he did. But I owned the word deflation up till around 1998, 1999, after the collapse of the Thai baht. So my long-term deflationist perspective has been eternally bullish on the dollar, and I've been putting out recommendations to just look to look at long-term treasuries, we're not looking at yield there on the 10-year note and the 30-year. We're looking at capital gains of 15, 20, even 25% if interest rates keep coming down. So the capital gains in long-term vehicles like that they can be enormous. Let me show you the monthly chart, the really long-term chart in a dollar. And this formation here, I know we've seen it somewhere all here. It's not bullish, but it could get transformed into bullish if we start breaking out. It's sort of in a dicey area there where we want to be paying attention, and I never want to be trapped by my own predictions. Ostensibly, this is the pattern we're looking at in a dollar. This piece of it gives us a projection up to 113 and change, but any way you slice it, there's going to be real major resistance just above 100 at 100.71. So I want to pay close attention to this thing. I'm pretty sure it's going to get to at least 100.71, but it's got to bust through it before we consider the move up to 113 a done deal. So I like the dollar. I'm going to look at it on a stochastic here. Let's see. And if you sign up, well, this is interesting. I look for divergences on a stochastic, and here we've got lower price lows met by, it was not able to get as oversold at this low as it was here. So that was very bullish, but we're getting the possibility of divergences on the bullish side up here. In other words, we made a price high, a slightly higher price high, but if this thing starts rolling down, it will have generated a decreasing lower stochastic highs. So that would be a real warning sign in the dollar, like however bullish I am and however much I think deflation is going to rule. If this thing starts making, if the monthly closing bar for June and July and August is toward the lower end of the price bar, it's going to turn this thing down in a way that would generate an incipiently bearish signal. And you can see it did it here. Stochastic high, higher price high, higher price high, but the stochastic high was barely any higher, and you can see what kind of correction we got in the dollar from that signal. So it's a pretty good pretty good signal. I am going to put out everything you needed to know about stochastics in 5 minutes or less. If you sign up with Rick's Picks, remind me, and I'll send you that brochure. Not a brochure, I call it a monograph. Carol wants to look at Target, doing everything they can well. It's amazing how just a couple of the operators like Target has separated themselves out from the pack of big box stores, and they've done a hell of a lot really to get where they are. So it looks pretty good. The pattern that I would use to give you some target here, oh, you can't even read it on this. Let me go back to a white screen so you can see it. All right, so the one I kind of like is right here, but there are a number of other uptrending patterns that are giving this thing some boost. So it looks to me very capable of getting it to 96.50. Not a bad rally from here. That's about 11% maybe. So it's got pretty good potential. And there are ways, a lot of ways that we use with the hidden pivot method to get into things like this. One way we're doing more and more of, well, I'm not going to, let me not give you the reverse ABC here because I don't want to confuse you, but all right, so we've got a couple nice patterns. One, again, up to 96 and change, and we've got the bull market monster target here of All right, and we see the first time that target encountered the midpoint pivot, it stalled out for 4 months or so. Then when it got up here and pulled back to the green line, target was a mechanical, this is a textbook mechanical trade, was a mechanical buy at 63.76 back in December of 2018. And it went against us. The trade went against us by a few points, almost 4 points, but it eventually recovered. And the mechanical trade was good for at least a ride to the red line, but we see we're above that here. And with all the struggle that it's had at that red line, I would say 109.37 isn't a done deal, but it is my theoretical target for the bull market as a whole. I think it's got a pretty good chance of getting there. A request for CROX, which is Crocs. Crocs is like remainder bin. They're on their way out, so I'm not going to give you anything in a way of a bullish forecast for Crocs. And you can see it rallied here, and the buyers didn't have the moxie, the balls, the gumption to get above that peak right there. So everything to me looks awful in this stock. I would look at the weekly chart to get a handle on it. You might get some sort of rally here, but it's actually a counterintuitive buy on if it makes a low between this low and this low, and it rallies a distance of about it would take a 3 or 4 point rally to trigger a counterintuitive long, in which case you might expect to make yourself let's see, about 4 or 5 points on the stock. But I don't like Crocs at all. They're, as I said, it's a remainder bin company. They don't have too much. They're out of style. Gap, same thing. A request for NCV. I like your new technique there, Scott. One at a time. What does this company do? The Alliance Convertible and something Inc. Fund. Alliance GI. I have no. Give me some idea what these guys do, Scott. All right, here I'm going to come up to that high, that low, and that high just to get a fix. Interesting. All right, so if you'd asked me back in December, I would have said buy the hell out of the stock at that red line, the midpoint hidden pivot support. Well, I've got the right pattern here, and what that means is that if you look at the chart and you think, I just don't like the way this thing goes, it's eventually going to find its way down to $3.60 and maybe even $2.37. That's where I think it's going. August cattle, hang on one second here. Let's see, live cattle. I don't know, August. You got to say which month there. August. Okay, I'm sorry. That does it. All right. So August cattle. All right. So let's see. What are we doing here? We really can't find much on the weekly chart. So let me come down to the daily chart, and I'm going to look at the daily chart. Just hold on. I've got a phone call that I muted. The only thing I can see here that kind of works on the daily chart, it's a bit gnarly, but this is the pattern that I think is working. It did live cattle. All right. So it's staging a little bit of a rally from the red line. It did dip below it, and I think that's fatal. It is a so-so mechanical short from 106.60, and I'll take that trade. I'd probably get it down to finer nuances if I were actually trading it, but the wholesale signal here is a so-so mechanical short from the green line. And I see, I think I'll leave it at that. I could slightly alter the pattern here, but I think I got it right. And now I'll do it here. It looks a little cleaner to me. All right, so it was a spec buy down at the red line, but bigger picture, you want to short it at 106.344. CEF income 12%. CEF, that are you talking about that Allianz? CEF, Sprott Physical Gold. I don't know if you've asked for CEF. I don't know what that means, Scott. CEF income 12%. All right, Daniel, you've had your turn. Carl wants to look at natural gas. And it doesn't look good. We all know that our natural gas bills will go up every month no matter what this thing is doing. But all right, so is there a bottom for this garbage? Let's take a look. Like 99% of the vehicles we look at, it didn't quite get to D. The D target is still valid. So yeah, it's got a nickel to fall here per quadzillion cubic feet, whatever it is. Rick, don't worry about the small black dot, Elliot. Don't lose any sleep over it. LEQ is August live cattle for Thinkorswim. Well, since I found it on my chart, I'm not sure why you're mentioning that. All right, SLV. And like all of our bullion vehicles, this is at least is ostensibly bullish. And it got stalled at the red line today to midpoint pivot. If and when this thing gets above it decisively or closes 2 days above it, I think we're going to 1453. That'd be no big deal. It's that's only a 40-cent move. I guess percentage-wise, if it happens in a couple of days, your annualized gain would be on the order of 6 bazillion percent. But it looks good. I mean, this is a really powerful impulse. Like if we get, I want to move up into here. I want to see it trade 14.25 before I would tell you to buy a pullback to the green line mechanically, but that would be a pretty nice mechanical signal, a good belated way to get long in SLV. All right, so let me mention this one more time. If you want to get a quickie on some of these trading things that I threw out, you could get a handle on a mechanical trade. Come Thursday night, 8 p.m. To get your invitation, just go to rickackerman.com/demo. One other thing I want to show you before you leave. I did mention earlier that I had a great deal on it's let's call it a learning package that would give you everything you need. Let me this is essentially a hidden pivot course, which I've offered as high as $2,500 when I taught it over 2 days live years ago in places, big cities around the world. But I mean, in this package, I also offer $147 value, 3 months of the weekly tutorial sessions, and 3 months access to the Hidden Pivot Trading Library, and also 7,000 annotated charts, access to those. And if we total those up, we come to a $3,143 retail price. I'm going to kick that up just so I'm sure you get it all, so that you learn everything you need to. I'll offer, besides the Hidden Pivot course, 12-month subscription to Rick's Picks. That is a $708 value. And again, to make sure that you learn the Hidden Pivot method as well as you can, as quickly as you can, I'm going to give you access to the weekly tutorial sessions. This is where we get on charts in real time and we look for actual trades for real money, real time. It's not unheard of that students who come to these Wednesday sessions will make back the price of the course doing a trade that I flagged during the Wednesday sessions. And if you cannot get to the Wednesday sessions, each one is recorded, so they operate as kind of a graduate studies course. And finally, I'll throw in half off on a one-on-one consultation with me. Some people who learn the Hidden Pivot method pretty well might have a stumbling block, and they will come to these one-on-one sessions. So if we total all that up, $4,492 just for Rick's Picks alone. I've had subscribers pay me $3,500 a month. That's $42,000. The only difference between what they were paying for and what you get is they got to tell me which stocks they wanted me to track each day. But the touts are identical to what I was sending them for $42,000 a year. So great deal at 40. Let's see, it's at, again, I'm going to offer the whole package here at $997. It's rickackerman.com/web deal to get the whole package, all the bonuses that I offered. And if you're really interested in the Hidden Pivot method, this is the best way to learn it. So with that, I am going to, again, rickackerman.com/web deal. With that, I am going to wish you all a very pleasant good day. We got a lot of things on the record here as far as stocks, futures contracts that you wanted me to look at. I hope that you take some things from this session that will help you make some money. But if you're interested in learning how to do it yourself, be sure to come to Rick Ackerman, rickackerman.com/demo to see what I've got to offer. And if you want to get instantly subscribe to Rick's Picks, just go to the home page here, and the top of the page, leave your name, address, start my free subscription. You'll be in a jiffy. So with that, I'm going to bid you all a very pleasant good afternoon. Thank you very much for your kind attention.